our top story of the day, the life and legacy of Charlie Munger. The Berkshire Hathaway vice chairman and investing legend has died. Now he was 99 years old. Munger was Warren Buffett's right-hand man. In a statement, Buffett said, quote, "Berkshire Hathaway could not have been built to its present status without Charlie's inspiration, wisdom, and participation." For more on Charlie Munger's legacy and his impact on the investing world, we want to bring in Bill Smead. He's Smead Capital Management Chief Investment Officer, as well as Lee Munson, Portfolio Wealth Advisors President and Chief Investment Officer. Lee and Bill, it's great to have both of you. And Bill, let me start with you. I know you're a longtime follower here of Munger, a longtime investor within Berkshire Hathaway. In terms of the legacy that Munger leaves behind, how will you remember Charlie?
Well, a couple of his favorite thoughts are first of all, the key to success in investing is weak competition. He wanted to do things that other people didn't want to do, use long-term time frames that other people didn't want to do. And then his other thing that's very important is ignorance avoidance. And we look at what most professional and amateur investors do leads to a lot of stock market failure. And Munger was very keyed in on avoiding those mistakes and avoiding ignorance, like chasing popular securities or buying based on whims and he would say fantasies. Munger didn't suffer fools easily, right? He would just tell them the truth, and it was a joy to enjoy his education. Those two men have been incredibly generous with their education of people like myself.
And Lee, I want to bring you into this as well. When you think about the hallmark strategy, the mindset that Munger leaves behind and that the markets will forever remember, what comes to mind for you?
Own good companies and just sit on your butt, right? Charlie Munger was really more of the punk rocker of Wall Street. When I was growing up, my dad always said, Buffett's a showman, but Munger's a guy you got to follow. That's a guy you really want to be in some way, shape, or form. What I got from him was, number one, I'm a value player. And that's a problem because you always want to find good deals and great prices. But what Munger brought to the table with Berkshire Hathaway, specifically Warren Buffett, was to get him to buy really great companies at merely good prices. I wonder, would Buffett would have bought Coca-Cola or bought Apple Computer if it wasn't for Munger's influence? And so I think for all the value players out there and everybody who follows Buffett and is kind of a cult, which there's a lot of us out there, is just remember, Munger always wanted to get fabulous companies at a reasonable price, and Buffett didn't. And he taught Buffett how to buy great companies versus being stuck in that 1930s mentality from Benjamin Graham of only look at the cheapest things on earth. And Munger said, yeah, but are they going to keep working after we're dead? Are they going to keep producing? Are they really a great company? Or are you just buying something because it's $15 in cash and they've got $10 in shares? The other thing I want to say is, he taught me, don't leverage, and you only get one time to be rich. And the thing that I've done in my life, ever since I heard about this years ago, is write your obituary now. I've done it. I've actually done it a few times. And then you try to live your life to match it. So if there's anything we should be doing today, late in the evening, is write our own obituaries and live up to it.
Yeah, I'd like to add to what Lee's saying. Buffett, from the time he went to work for Graham Newman, he had an amazing information advantage for a number of decades. So investing in common stocks was just totally abnormal, especially in the aftermath of the '29 crash, the Great Depression, which Buffett jokes about because he says, I wouldn't be born if my dad hadn't come home early from being a stockbroker. So Warren and Ben Graham, they had an information advantage. They wanted to buy 50-cent dollars. And so what happened was by the 60s, between, say, the end of World War II and the mid-60s, that had all been fleshed out. In fact, we had an era very similar in the mid-60s. They call it the Go-Go 60s. Cathie Wood was named Jerry Sy, and the Manhattan Fund was up 130% in a single year, and the go-go 60s based off the space race, et cetera. By the way, here rhymes. What are we doing now? Space race. That's the point at which you no longer had an information advantage. Everyone had the same S&P sheets. Everyone had value line. Everyone had the access to the information. So then Munger said, you've got to make your money by better decisions. That's what this is all tied to, making better decisions off the information that everyone has. And then lastly, I'd like to add to that there was a superior intelligence, not artificial intelligence. There is a superior intelligence associated with the algorithm of decades of investment experience. The rhymes that have to be trusted, Munger and Buffett trusted the rhymes. When the Berlin Wall fell, they could look and say, hey, there's countries all over the world that are now going to have access to capitalism in a way that they hadn't. So we'll buy Coca-Cola because somebody might want a clean and tasteful drink of water at a whole bunch of countries that Coke had never done business in before. And that's those algorithms kicking into gear, good decisions rather than an information advantage.
And Leah's bill speaks about the investment philosophy of Warren Buffett and of Charlie Munger. Since we've gotten this news yesterday afternoon, there also has been a focus on succession and exactly what that is going to look like now that Buffett obviously questions just about what exactly the future holds and what exactly the direction is for Berkshire going forward. I'm curious to get your perspective, just what you think Munger's passing means for Buffett personally, but also for Berkshire and the direction of the company moving forward.
Well, Munger said a few times that some of the replacements then the succession plans, that some of those are better business managers than Buffett himself, and kind of pokes fun Buffett a few of the meetings. So, we've had decades of having these guys be really old. We've had a few decades of people saying, when are they going to die, right? I mean, Munger's 99 years old, right? So this isn't a new topic. I mean, even 10, 12 years ago, Munger was saying people have got to find a new cult hero here. I'm timing out. So I'm not really concerned about Berkshire Hathaway. Now, when Buffett goes, which eventually we all will, that's going to be interesting to see if the stock actually reacts. But when you consider the type of people that they have and the decades of experience that they've been able to pass down, I'm not really concerned about Berkshire Hathaway longer term. In fact, I would always look for opportunities where people get emotional about these cult heroes passing away and thinking that Berkshire's best days are behind them. I would say that, when these two guys, one's gone, the other one's going to go eventually, then you have a whole new breed of people that took everything that they learned, and there's more of them. So I really don't think it's going to be a concern of investors at this point.
Yeah, well-trained, just a depth of roster that they have, but no doubt the entire firm feeling this loss, at least here on the day right now, and his legacy going to continue to be remembered profoundly. Bill Smead, Smead Capital Management Chief Investment Officer, and Lee Munson, Portfolio Wealth Advisors President and Chief Investment Officer. Thanks so much for helping us pay tribute this morning to investing legend Charlie Munger.